His leadership in ASSOCHAM has been unequitably wonderful. There is no doubt about it that probably we have the best person that we have had in terms of all the support that you have given, Dr. Charan Singh. Thank you very much. I cannot tell you how grateful I am to you. Thank you, Dr. Virmani. Your experience in terms of the economic side and the leadership that you have shown in the past so many years is really wonderful. And thank you, Dr. Arvind Virmani, for being here with us. Dr. Jayantha Ghosh, also, we are really proud and privileged to have you here today in this purpose. Digital India, as the Prime Minister has equated, has been a boon beyond imagination, especially in the time of COVID. The purpose of digitization in order to reach one and all in this country has been something which is unprecedented, and the last 5 years has seen a paradigm which probably has brought about an equalization, a reach, which probably would consider as the next revolution in this country. We are now talking about reaching the digital to each and every farmer, to each and every remoter of remote areas, and the extent to which this has happened is unprecedented in the annals of Indian history. Today, when we talked about opening bank accounts of each individual farmer and to be able to reach and give what they wanted directly, has saved 65% of the cost to the government and to all the middlemen who were earlier fleecing the country in terms of it. The direct money transfer which has taken place has been one of the greatest equalization measures which I think has happened in our country and has made a difference. In recent times, we have seen what the Prime Minister announced through the Income Tax Department, what the Finance Minister said of a faceless assessment. This kind of thing could not have worked out but for the process of digitization which has taken place in the last couple of years. And we have seen that paradigm happen unequivocally, and we are looking forward to it in order to make the next paradigm. I also have the opportunity to work in the education field. I have 14 colleges in Mumbai having 45,000 students and 6 schools, which are also a huge number. When we got into the COVID times, we thought that this is going to be for a short period of time, and we really don't have to do too much. Maybe a little conversation to keep all the children and students into connectivity world. We found that this paradigm has changed. We were now able to do it. Today, I'm pleased to tell you that out of the 45,000 students in colleges, already 37,000 students are online. The rest are having some problems in terms of getting internet connectivity and not having the medium which they are going to do, which also we are working on how we will be able to reach the entire part. Education is going to take a paradigm, not today, but ultimately it will change the face of education in this country. We are working on twinning of these schools and colleges and different institutions in order to reach the remotest part of the country and also to provide for the people who otherwise didn't have teachers at all. Healthcare, banking system, all the other things which we are now talking about, the ability to get governance at a better level in order to be able to see and visualize through the internet facility the title deeds and documents of each or every registered document is available today. Relating to property, RERA now has on the website each and every property which is put up for sale. And the customer is now able to see the exact details of its property, and there is no possibility of him being cheated. Digitization is a wonderful instrument which India is able to use. We are really grateful to all the components who have in industry, government, who have been able to do that. And today's interaction will certainly take us to the next level in order to see how we can provide with a digitized India in a new format which will reach each and every person in our country. Thank you very much for this interaction that you have created, Dr. Charan Singh. Most grateful to you and all the other participants who are here today in order to add value to this thought process. And afterwards, we will communicate to the government in order to take this paradigm to the next level. Thank you very much. Have a great day.
So with this, now it's time to really get into the lecture we have all been waiting for. So I will do a brief introduction of Dr. Ratna before I hand it over to the chairman of the today's session. I'm just moderating the session. And then we also have today with us Dr. Jayantha Ghosh, who's the founder and director of Waymark Invincible Foundation. He would be speaking just before Dr. Ratna Sahai. Now, as an introduction to Dr. Ratna Sahai, I would, as you know, anybody would be envious of her bio. She has worked at the very best places one can think of, and she has worked with the very best people that you can think of. She has worked with Stanley Fischer, she has worked with Rogoff, and then she is the deputy director in the IMF in the Department of Monetary and Capital Markets. Her work is extensive and she has published in almost all leading journals. She is highly respected. She is also working extensively on issues like Fintech, which you have seen, and then she has taught at Delhi University, at Columbia University, and New York University. She holds a PhD from New York University. The topic for today, as you know, is Fintech, which the President has beautifully introduced to all of us. And I now hand over the mic to our chairman of the session and chairman of EGROW Foundation, Dr. Arvind Virmani, whom we all know so well. He's been the chief economic advisor of our country. He's been the executive director at the IMF, and he's playing a very important leading role in the economic analysis of the country. You would be happy to see his tweeters all the time, on the spot, and his articles. And at this time also, with his rich experience, he has been publishing extensively, and you could get a chance to read his blog and his research work. With this, I hand over to the chairman of the session, Dr. Arvind Virmani.
Thank you, Charan, and thank you, Mr. Nirmandani, for your kind words. I was actually quite interested in the education part, which you mentioned, and I've noted it. Maybe we'll discuss some other time because the focus now is on finance. So before I hand it over to Ratna and maybe Dr. Ghosh before that words, let me just give my perspective, which is kind of a backdrop to probably what she has to say, and both of them have to say. So I still remember a seminar I attended before I finished my term as CA and went off to the IMF. I think it was in 2009. And the kind of numbers I recall is that, which really surprised me, was that the number of bank accounts in India was still covered less than 50% of the population, but that mobile cell service had reached something like 70%, as I remember. And this was a revelation to me about the use of mobiles in finance. I think the jam where clearly the government, and as Mr. Anand mentioned, government has done a lot with its program to number up to and mobile also somewhere in the same region, kind of competing. However, I do what I took away at that time of the importance of mobile, I want to repeat because I think it's still relevant despite this big increase in bank accounts, and it has to do with inclusiveness, which is what Ratna is going to tell us more about. But one of the reasons why we thought of the unique ID number, which subsequently was renamed Aadhaar, was to take the direct benefit transfers and the direct cash transfers directly into the hands of the poor and empower them. In a sense, taking the power of the bureaucracy from the bureaucracy's hands and putting into their hands. And that is where I, at that time, thought of the importance of mobile, because literally, not just figuratively, but literally, you empower and put the money into the hands of the people. Now, clearly, with bank accounts having proliferated, one would say, okay, in an urban areas, it doesn't matter whether they go to the bank account, there's a bank in every neighborhood, or they use a mobile phone, but it still makes a fundamental difference in the rural areas. And I want to mention very briefly. Now, of course, since the time 2000, a lot of correspondent banking, etc., has come in, but the demonetization kind of brought this back home to me very clearly, where one of the people who, in fact, our driver who is from Rajasthan, said that he had to go 5 kilometers from his village to get to a bank and change his money, and it took him a whole day. So that is the difference. Despite correspondence, what the mobile does in rural areas is puts the money right into your hand. That's huge empowerment for the welfare system. So having said that, and just as a way of reiterating, I'm sure Ratna may have much more information and new trends to enlighten us. I just want to very briefly mention COVID and take up the kind of Mr. Hirnandani left off. Of course, the trends were all there, and he's talked about it. I have talked about what the government has been doing, but still, the overall digitization of the or adoption rate by individuals was much lower in India than in many other countries, including the US, Europe, etc. What the COVID has done is to hugely accelerate this trend of digitization. Not that we are suddenly going to catch up with the rest of the world or countries, but I think the rate of growth is of digitization and the things.
Sir is on mute, it seems. Sir is mute.
So these e-education is going to go up much more rapidly than was happening before the COVID. So that is one of the positive trends in a way, and it also gives great opportunities for companies and for everybody. With that kind of background, let me now first invite Dr. Ghosh, I think, to say a few words. I presume it'll be short, otherwise I would prefer that you speak after Ratna, but that's fine. First, Mr. Ghosh, if he just wants to make a few comments, and then Ratna, kindly start your talk.
Okay. Yeah. Good evening to all eminent panel members. Honorable President of ASSOCHAM, Dr. Hirnandani, Dr. Virmani, Dr. Sahai, and Dr. Singh. First of all, I would like to express my sincere thanks to ASSOCHAM for giving me opportunity to share my viewpoint on this very relevant topic, financial inclusion in the post-COVID-19 era, the promise of digitization. First, I will talk about the global perspective and then in Indian perspective. This is prior to COVID-19. The financial services industry was already evolving at a rapid pace, driven by changing customer expectations, heightened competition from incumbents and new entrants, evolving regulations and advancement in technology. Digital transformation was well underway, the evidenced by the proliferation of digital channels, tools, and challengers banks around the globe. Already COVID-19 has dramatically accelerated the rate of digital adoption in financial services, causing unprecedented changes in human behavior and forcing new ways of working on financial institutions. In global scenario, the visas saw more than 13 million consumers in Latin America make their first ever online transaction in the March quarter. It also proven the case and exposed the urgency for digital transformation as digitally mature financial institutions have displayed agility and resiliency in the immediate aftermath of this crisis. Now this COVID-19 drives an unprecedented change, which I will discuss about the 4 fundamental shifts, which I want to share with you all. First is adoption of online, mobile, and call center channels. This is limited mobility and shelter-in-place order across the globe have forced rapid adoption of digital channels in financial services, condensing years worth of changes into months, if not weeks. In the US, which has traditionally lagged other countries in digital adoption, banks are experiencing all-time high in the number of logins and check deposits. Interestingly, a significant share of this growth coming from seniors groups that have traditionally been slower to adopt digital channels. And Goldman Sachs has reported a 25% increase in the number of active users on the bank's institutional platform over the first several months. By the turning point of highlight for digital and less payments, there has been an acceleration towards digital payments as consumers shift a greater share of their purchases online and businesses, either by choice or by necessity. A race to set up e-commerce capabilities to capture sales during the government lockdown. My third point is rapid virtualization of workforce and the way working. Financial institutions have gone from scarcely imagining their employees working from home to individual companies transitioning tens, if not hundreds of work model. That is, as Bank of America have each transitioned have roughly 70% of their workforce to work from home and have established the contingency locations for their remaining trading and call center operation. On the other side of the globe, the Standard Chartered has kept most of its 84,000 employees working from home as of May 2020, increasingly the capacity of its VPN system by 600% to keep pace. Even the traders which have traditionally been tethered to the office have shifted to remote work in large quantities, and many financial institutions such as Nationwide Insurance, who moved more than 98% of its workforce to work from home in just 5 days, have committed to making the change. My fourth point is the evolution of underlying market structure and economics. After the several years of relative stability, COVID-19 has ignited a fundamental shift in the size and structure of the financial services industry. The 10 years US Treasury yield dropped below 1% for the first time in the March 2020, a drop in consumer spending and increased loan loss provisions. Meanwhile, the insurers are battling reduced the premiums and escalating claims cost due to the pandemic payouts. And although impossible to predict the length and severity of the economic downturn, in the outcome is likely to be a smaller economy that should require financial institutions to operate more effectively and efficiently in order to remain competitive. These four fundamental shifts brought on the COVID-19 that have this accelerated digital transformation in the financial services industry. And many financial institutions, COVID-19 has unlocked hidden potential, stripping away many of the barriers and organizations traditionally face the realizing the digital promise. COVID-19 has generated leadership and organizational support by highlighting the need for digital transformation as a means to reach customers and maintain operational resilience. So since the pandemic outbreak, the organizations have seen the massive progress in their digital transformation agendas. However, with decisions being made and solutions being implemented in real time during the crisis, we have yet to see the full effects. How will safely and the security be impacted as organizations rush to act with incomplete data or even limited governance? Now the question is, will financial institutions be willing to commit to permanent changes in technology strategy, mindset, and behavior once the urgency subsidies? There are several implications on the financial institutions must consider beyond this immediate crisis response. Now, if I talk about the Indian perspective, that is, and since 2017, the financial services industry in India has seen accelerated growth and widespread adoption of new mechanisms of digitization, and this is complemented by the proactive regulatory and policy efforts of financial inclusion and an increasing availability of affordable internet and smartphones. Fintech is now become a critical component in urban, semi-urban, and this mild distribution of economic development through financial services. And I believe the post-COVID-19 period, we will see a shift in the Indian consumers growing the preferences for digital and contactless payments, renewed emphasis on savings and investment to create a household capital cushion for uncertain times, and increased interest in health and life insurance to manage future unforeseen financial shocks. In a post-COVID world, India's early stage tech startups will focus on managing their cash flows more conservatively than recent years, and experimenting with remote work practices and building products that solve livelihood challenges for Indians across the socio-economic spectrum. While this crisis has introduced ample challenges for India's thousands of digital fintech businesses, many will emerge more resilient and printed for global stage with Indian innovation. And while this is the global stage with the Indian innovation leading the way, the government of India has ramped up its digital finance efforts as a part of the COVID pandemic response. It is effectively promoting use the real-time unified payment UPI for transactions, the Jan Dhan bank accounts, a key component of our Honorable Prime Minister's financial inclusions initiative over the past few years, have been particularly beneficial during this time for direct cash transfer to the government to the most vulnerable sections of the society. That's all from my end.
Thank you. Thank you, Dr. Ghosh. Ratna?
Thank you very much. Charan, how many minutes would you like me to take presentation?
For 35 to 40 minutes.
Okay, thank you. So let me start with sharing my PowerPoint. And let me know if you don't see it, then I'll have to do something. But can you see it?
Yes, we can.
And you're able to hear me too?
You too.
Okay. So thank you very much. It's really a great pleasure to be with you all. And it's only when I see so many Indian faces, I feel I'm really missing India. And that has not stopped all these years that I've been here. So it was great to hear about what's going on in India. My work is a global study. We conducted it with a pretty big team over the last 2 years, where I also visited India and several other countries. And some of what I'm going to show is also snapshots of work we had done even earlier. So I started working in this field about 5, 6 years ago. So just to give you an idea about my presentation, first I'm going to tell you why is it that financial inclusion is important. I don't think the Indians need to be convinced, but when I go around the globe, and especially in advanced economies, I do have to make that pitch. But the important point, as you will see, that I want to make is that it has huge benefits for everybody, not just the poor and the low-income households. And then I'll talk about our own work, and I'll get into the main findings.
Ma'am,
let me start.
sorry to interrupt. If you could just
Yeah.
press F5, it will maximize your screen and it will give the F5 on your keyboard. That's great. Thank you, ma'am.
Okay. So okay. So let me start with why I really got into it. I work for an institution which focuses on the macro, on the big picture. And so we started exploring the relationship between economic growth in any economy and inclusion. And based on the work, the econometric empirical work that we did, it was really interesting to see that actually if more people are included, especially low-income households, small firms, into the formal financial sector, the effect on economic growth actually is much higher. So when at low levels, this is what the chart says, at low levels of financial inclusion, when only 25% of the population has access to formal financial services, the effect on growth is small, but it really rises dramatically if 75% of the population is included. So the impact on growth, which helps everyone. Second, in a recent study that I did last year with my co-authors, what we found was that with greater financial inclusion, inequality falls also. And this holds for all kinds of economies, including advanced economies. So in this chart, what you see is the estimated impact of financial inclusion on income inequality. So the vertical bars here show estimated change in what we call the Gini coefficient, which is a measure of inequality. So all these negative numbers means inequality is falling. So as you can see, as an example, an increase in the availability of ATMs from the 25th to the 75th percentile is associated with reduction in inequality by 9 percentage points. This is the extreme left-hand chart. So as more people get included, inequality falls. The other key message is that, of course, these benefits are much higher when the depth of the financial markets and the institutions are lower. So you get much higher benefits as you expand. And the third thing, which we at the IMF care a lot about, is that there has always been a concern, and India has seen this too, that if you include too many people, and you extend credit, etc., too fast, it can lead to financial instability. In fact, the global financial crisis was because of too much of credit being extended to low-income households. But what we found in our study, and this is what this chart indicates, is that if regulation and supervision is of high quality, there is no contradiction between achieving financial stability and increasing financial inclusion, which could be payments, which could be credit, or any other form of inclusion. But let's see what the situation is, and this is measures that we have on financial inclusion, which is not digital yet, but this is overall, mostly banks. So this chart basically shows the fact that you see the dots all over this particular graph tells you that adults, whether women, which is on the x-axis, or men, which is on the y-axis, the access really varies quite widely across the world. And for the benefit of the current audience, I also put India on that chart. So India, because of the initiatives of the Modi government, the opening up of accounts and the usage of accounts has really gone up in India. So if I had shown you this chart, 10 years ago, India would be at a very low end. Now, comparing men and women, so if you are on the 45-degree line as a country, it means that men and women have equal access. So countries which are in the red shows that men have much greater access than women. And it's also still true about India. So there is some way to go to increase access for women in the world. But now let's look at some measure of fintech, how fintech is transforming the global economy. And in this chart, it's really interesting to see that fintech is absolutely opening new avenues for inclusion, as previous speakers mentioned and the president very eloquently pointed out. And what we are finding is that more than 80% of the adults have access to a mobile phone in the world. And this has, of course, been facilitated by the increase in mobile services and also internet. So this tells us that indeed there's a huge opportunity for including more low-income households and small firms, and for people to not just come out of the poverty line, but also thrive and contribute to their own economies. So let me now talk about the most recent work, and this is why Charan had invited me to talk. So what is the existing literature on fintech and financial inclusion? So basically, very quickly, there are two strands of work. So one is the traditional financial inclusion work, and which are the results that I was showing you earlier. And within that, there are both micro work as well as macro studies. And then the fintech and related financial inclusion, this is a very new area, and we suffer a lot in terms of getting comparable cross-country data too. So we've tried to use as much as we could. But there you have three types of work that is evolving. So one is just descriptive stock taking. Then there are microeconomic studies, and then there are macro studies. So our work fits in with the last. So what was the goal of our research? So we really care a lot about looking across all our member countries. We have 189 member countries, and we wanted to see and explore the relationship between fintech and financial inclusion. And when it comes to data analysis, if you look at the left-hand side chart, it's important to point out what is it that we mean by financial inclusion. So financial inclusion can mean payments, credit, savings, insurance, investment management, and cross-border payments also. And how does fintech fit into that? Unfortunately, as far as data is concerned, we don't have still cross-country data on many aspects, but we do a lot on the payment side and some limited amount on the credit side. And I will show you the analysis related to those. So what is our contribution here? So there are a number of contributions that we feel we've made. So it's the first comprehensive global study, macro study on fintech and financial inclusion. What we've done is we've used newly available data to construct actually a new index to measure digital financial inclusion for about 52 emerging economies and low-income countries. And we only have data from the period of, as of now, 2014 to 17. So a lot has happened since then. Traditional financial inclusion, which then allows us to look at the progress in both the traditional and the fintech or the digital financial inclusion. We also analyze determinants of digital credit. We use a new database there. But then because we realized that data is so short and not updated, we conducted several interviews across the globe to better understand the developments that are not yet captured in the data. So what did we do? We had a two-pronged approach. We had an empirical analysis and interviews with fintech stakeholders. So there were about 70 plus stakeholders, and they were from the fintech companies, banks, regulators, think tanks. We covered all the regions in the world: African, Asian, European, Middle East, Western Hemisphere, both advanced economies, emerging, as well as low-income countries. And then we also went back to some of them after the crisis hit to get a sense of what the situation was on the ground. I won't go into the details of the data sources, but we tapped a number of data sources, including ours. And then we came up with this comprehensive financial inclusion index, which was both traditional and digital. And as you know well, access and usage both matter. So we looked at both aspects. So then the basic question that we asked is fintech increasing financial inclusion at all? And when we looked at the data, what we found was from the interviews confirmed our findings that fintech is supporting financial inclusion. So what did they tell us? They told us that apart from the faster speed and the higher efficiency that benefits everybody, fintech is also helping tremendously the lower income households. The SMEs, the small firms, are benefiting from lower service costs, little or no collateral requirements for credit extension, and typically more user-friendly and customized experience. They're also supporting more efficient cash management, which was interesting. Now, on the right-hand side, the chart shows that overall financial inclusion, which includes both digital and traditional, has indeed increased in most countries between 2014 and 2017. So in some countries, for example, as you can see here, like Ghana, Benin, Senegal, the African countries, progress in digital inclusion was much higher. While in others, traditional inclusion, for example, in Mongolia, Peru, was greater. But there were, interestingly, about 8 cases that we found, mostly in Africa and Latin America, where the progress in financial inclusion was entirely driven by fintech. In fact, actually, there was a fall in traditional access. So if you look at the trends across broad categories of countries, different regions, there are 2 points here. So one is, this chart clearly shows that digital financial inclusion has increased in all regions, all over the world. But what we are seeing is that the progress was the fastest in Africa and Asia. And in fact, it almost doubled in Africa. And then when you compare the traditional financial inclusion, the banks, etc., versus fintech-driven inclusion, these charts tell you a snapshot of the extent of different kinds of financial inclusion. So here a higher number indicates, of course, a higher financial inclusion. The main takeaway that I would like you to take from here is, from a regional perspective, African and Asian countries maintain an overall lead in digital inclusion. They grew the fastest, as you saw in the previous chart. While in others, like in Europe and Latin America, it's the traditional financial inclusion which still dominates. And now, in this chart, what we find, excuse me. So when you look at the credit aspect, this chart shows that China totally dominates the credit aspect, along with a little bit US and UK. So US, UK, and China make up about 98% of the fintech credit. But what we are seeing, as you can see on the right-hand side, fintech credit is also growing pretty rapidly, and it's tripled in 3 years. So then the question comes up, is it really consumer credit or is it business credit? And what we are seeing is that both consumer and business credit are growing, but in consumer credit has grown much faster than the business credit. And again, the reasons why our interviews confirmed that they are able to get alternate sources of data for determining the creditworthiness, and it's much faster. No collateral requirements, and the speed efficiency has played a huge big role. So when you look at the credit composition, this has varied widely across the regions. So, for example, in the Middle East and in Africa, consumer credit dominates, whereas in Asia and Western Hemisphere, it's business credit. So what are the macro implications of digital financial inclusion? And there we conducted another study only looking at digital inclusion. And again, the key point I want to make from this chart is we find that the impact on overall economic growth, which benefits everyone, is huge of increasing digital inclusion. So it's not just benefiting the poor. That's a key point I want you to take. It benefits everybody because overall economic growth increases. Now, we followed up with what is happening after the COVID crisis hit. And if you look at the recent history, the SARS epidemic in China accelerated China's launching of digital payments and e-commerce. And this shift in consumer behavior also helped overcome the trust issue they had with e-commerce previously. And if you fast forward to now, was rightly pointed out by previous speakers, digital financial services is really picking up speed. And we anticipate that this will be enhanced, and we are already seeing that across many governments, measures that they are taking to speed this up by lowering fees, by increasing limits on digital transactions, etc. And more specifically, countries like Liberia, Ghana, Kenya, Kuwait, Myanmar, Paraguay, Portugal, those governments have done a lot. And I do think that India can facilitate this even more. So what is happening to the traditional banks? This is a real issue. And what we discovered in our interviews is that there are various models of interaction between fintech companies and incumbents. So the fintech companies, including in India, have been focusing on niche markets, which have been underserved by banks. And in some cases, of course, they are directly competing with banks, such as digital banks. So increasingly, fintech companies, they are collaborating with banks to benefit from their experience and expertise in, for example, in regulatory compliance, and also to facilitate scaling up. In turn, the fintech companies provide banks with a state-of-the-art platform for reaching out to new customers. For instance, by managing digital lending operations on behalf of the banks, or by setting up platforms that serve as aggregators of bank-provided financial services. Big banks are also inviting fintech companies to set up in-house incubator and innovation labs. So our empirical work suggests that digital solutions appear to be filling the gap left behind by the traditional institutions. But the big banks are also very concerned, and they are responding to the disruptions from fintech. So this is a chart that just tells you how much spending there is in fintech by the big banks versus just the venture. So they're spending a lot more than investments by venture capitalists in fintech companies. These are the banks. So this is telling how much they are feeling the competition. So, of course, what I'd focused so far was on the opportunities, on the benefits, but I also want to talk a bit about what are the constraints and what are the risks to inclusion itself. And for that, we conducted both interviews and we also did some empirical work. So when we talked with fintech companies, they were very concerned about uncertainty regarding the regulatory environment. They talked of the lack of technological expertise, what is commonly known as the coders. And we actually found this scarcity in repeated interviews we held in India, for example. But it was true in other parts of the world, including the US. These are, of course, the highest paid experts in this particular field. Now, of course, there were also funding constraints, especially to scale up, and lack of financial and digital literacy was also highlighted as constraints. And then from our data analysis, what we found was the digital infrastructure and mobile money agents were important constraints. In some parts of the world, lack of trust also mattered. the quality of governance in a particular country was important. And if the traditional financial institutions were not very efficient, of course, it gave them more scope. There were some legal issues also that came up. Let me just focus briefly on what are the risks to financial inclusion. So we are very concerned that with this rapid pace of development of the digital economy, there could be many people, many firms that are left out. So we really have to be very careful that they are not left behind because of lack of access, for example, to the physical infrastructure. And this, the president spoke to this, that it's a very important aspect to bring it more to the rural areas. Another way that I want to emphasize, and we haven't, it's not often talked about, but there can be biases in how data is used. So for example, the creditworthiness of potential buyers. Even though fintech and big data, etc., have made huge progress, but if the first entry, the very first entry of data is already biased against the poor, it's a real problem, because then that gets aggregated. So we have to be very careful to make sure that there are biases in how data is used is minimized. And then, of course, in several parts of the world, the potential retrenchment by microcredit institutions, either due to their limited capacity to adopt technology or because of competition, they might disappear much faster than the speed with which fintech companies can fill this gap. So we have to care about these aspects. Another issue that has come up is that, and we've seen that, for example, in Kenya, that there can be excessive, quote unquote, financial inclusion in some cases, where nearly 20% of mobile bank loans in Kenya are now in default. So, just reckless lending to people and making them bankrupt or overly indebted is also something to watch out, including in India. And this brings me to the most critical point, which is really pushing ahead with promoting financial and digital literacy. Let me just tell you the most amazing thing that I have found around the world, including in the US and other advanced economies, that typically schools do not provide or give courses on financial literacy and digital literacy. I mean, I want to push very hard the idea that every school, doesn't matter, in villages, in cities, in rich, poor countries, should start teaching the kids digital literacy, and we see that in many cases, but also financial literacy. Then, of course, there are other risks which you're familiar about. I won't go into it because that's common to fintech, which relates to data privacy, cyber risks, etc. And I just wanted to show you one slide on the gender gap in fintech. This is some new work that I'm doing, and we'll have a paper in a couple of months. It's a topic that's very close to my heart, which is the gender gap. So this chart shows the gender gap between men and women on financial inclusion, both traditional as well as fintech related. So there are a few key takeaways from this particular chart. Now, fintech is indeed contributing towards closing financial inclusion gender gaps. The gender gaps, as you can see on the extreme left side, they tend to be lower for fintech-driven financial inclusion than for traditional financial inclusion. And But if you look at the regions where fintech has been playing the most positive role is mainly in the Middle East and in the African countries. The gaps actually are lower for traditional inclusion in Asia and Latin America. And you can see that also in India when we look at the data. So we do need to bring the women up to speed on fintech in India. That's a key message. And how do we explain these differences? They could be cultural, they could be social norms. And of course, as I said, those barriers in literacy, both digital as well as financial. So I'm coming towards concluding. So what are the key takeaways, and and I want to also put for you, because there are so many of you who are involved in policy, I want to put some questions for you. So the key takeaways of my presentation is one, inclusion has macroeconomic effects, very positive, which benefits everybody. It can be in growth, in financial stability, in reducing inequality. The trends that we are seeing before and now even more after the COVID crisis, it has increased financial inclusion in payments and slowly picking up also in credit. The fintech related inclusion also is associated with higher economic growth. Fintech is closing the gender gaps, but not everywhere. Fintech is filling the gap left behind by the traditional institutions. When you look at the business models that are evolving, they range from collaboration to competition between incumbents and the new disruptors. We have to watch out for all the constraints. The governments have a huge role to fill the gaps, to create incentives, to build infrastructure, to also invite private participants in increasing financial and digital literacy. This cannot be underestimated. And of course, regulation and supervision has to go hand in hand. What we found is that many regulators and supervisors across the world, I think India is actually pretty good compared to most countries in the world in terms of how much the RBI is on top of issues relative to what I've seen in other countries. But they're playing catch up quite a lot. I think there's a shortage of coders, very much needed, and funding remains an issue, especially for the small companies. And I already mentioned the huge risks to financial exclusion, and we really need to watch out for that. The post-COVID implications, many of you have already mentioned. We have to be able to support an inclusive recovery. We can't leave the poor behind. I already mentioned about the catch-up of regulators and supervisors that is needed globally. And we have to invest in human capital at a basic level and at a very high level of expertise. And then we also need to ensure that there is sufficient competition. We cannot have the big techs dominate the whole world because right now they can provide cheap service, but tomorrow, they can jack up the prices. So we have to encourage the smaller fintech companies also. Let me get to my very last slide. And the questions I want to pose today for you are what regulations are needed for a safe development of fintech, which also preserves financial integrity, and how does one ensure a level playing field, especially when there are so many global players and small countries can't, feel helpless. And what are the best ways to achieve financial digital literacy? How do you identify and address the risks of digitalization? How do you prevent exclusion? How how does one achieve international cooperation? This is something we are going to need for data privacy, for cybersecurity, for ensuring competition, or digital identification. So let me just stop there, and I'm going to also stop sharing. Thank you very much for giving me the opportunity to share our work with you.
Thank you. Thanks a lot. It was very interesting. I followed your slides very carefully and quite very interesting for me personally. Charan, I guess we have half an hour for question and answers.
Yes.
So
Yes, we have about half an hour.
Depending on the number of questions, we can maybe take them 2 or 3 together. It depends how many there are.
Sure. We have already got a large number of questions. And Ashok Vishendas, one of the directors on our EGROW Foundation, also has a question. And then we have Mr. Dr. Swami, professor from Bangalore, from Hyderabad. He also has a question. So I can do one thing. I can tell the questions, which 2, 3 questions right now to set the tone. And then I will invite Dr. Ashok Vishendas to ask his question. And I'll also invite Professor Swami from Hyderabad to ask his question, if that is okay.
Yeah, that's the best. Yeah, you just give the 1 or 2. Yeah, that's good.
So the first question, which Dr. Ratna, is that this is specific to India. And the question is how to ensure Fintech in rural areas where infrastructure does not exist. Now, this is a question which I think is an interesting question, but of course it is related to India. And this has come from Gautam Sinha Ray. He's a lecturer and he's asking this question. The other question, of course, has come and which I think is a very interesting question. I think your research is path-breaking. And this comes from your heart because I have seen your research on gender earlier also. Now, when you connect gender with financial inclusion, this becomes extremely useful. Any policy maker would die for this because this is exactly what we want. And in financial inclusion, as well as self-help groups, this exactly is the strength we want to empower women. Is there a certain threshold level where you feel that, yes, this is where the women can get empowered? And I ask you this question based on my own research, where I found in Indian villages where we have the business correspondents going, families are so dogmatic. They would not like the business correspondent to directly interact with the lady of the house. So therefore, though the government does a direct benefit transfer, the money is known to the male members of the family who can then extort it out for liquor or other things, and the sole purpose of empowering the women is lost. So these are the 2 questions which I asked you right in the beginning. After this, I'm going to request Dr. Ashok Vishendas, and after that, I will be requesting Professor Swami.
Charan, can I ask right now? Hello.
Please ask right now.
Yeah. Good evening, Dr. Charan, Dr. Arvind Vimani, Dr. Ratna. It was an excellent presentation. We got new tangent and new insight into it, and then I feel I am become wiser after listening to you. One very small see, you have analyzed the data very scientifically, but those data, to my understanding, pertains up to 2017, most of the data. And then the technology is changing so fast, and the pace of acceleration is also very high. In that situation, do you think a lot of water would have flown in Indian oceans from 2017 till now? And then second question, in this COVID especially, there is a lot of unemployment on one hand. At another level, you have brought out there is a shortage of coder, but not many people know this, so they can do certain courses which will
get them gainful employment. And because there is a shortage, the wage rate will be very high and many youth will be attracted. And there are a lot of unemployed engineers. And my own research says, especially in India, there is a excess supply of engineers. And perhaps they don't know the coders are required. So how you disseminate this information widely so that people get to know and then they can reorient themselves. Thank you very much, Dr. Ratna.
Dr. Ratna, would you like to answer these? And then we go in the second round to Professor Swami, and many more questions are coming up. So first take these three.
Okay, I'll take these questions, Sharon, and also I'm rely on you to ask me the questions, whether they're from the chat or whatever you might be getting separately, right? So let me start backwards with Mr. Vishen Das's question. So thank you very much. I'm glad I'm bringing some value to all of you. And you're absolutely right. What has been particularly frustrating for us, and we like to do things scientifically, but the fact that one couldn't get data in real time. Hopefully with big data, we'll be able to do that in the future, but right now, no. So to do a cross-country comparison, the best we could do was 2017. But then we changed the whole focus of our project, and we said, you know what, we'll have to go or make calls and find out. So augment our scientific work by interviews. And these interviews we've continued to do in the last 3 years. So for example, I was in India late last year. I went to China. I mean, there are a number of countries that we traveled to. And we also took advantage when twice a year, there are a lot of people who come to Washington, D.C. for our annual and spring meetings. So I took the opportunity, along with my team, to interview a number of people. So what I have presented to you, at least on the interview side, is very much up to date, let's say. Because we also talked to the interviewer, the stakeholders after the COVID crisis, as recently as the last 2 months. I mean, the one thing that really stood out, and I don't have an answer to that question, is a lot of fintech companies, including in India, they're really concerned about funding. I mean, because those who have been funding the smaller companies have been retrenching quite a lot. And what concerns me there is how much the big techs might enter the sphere. And to some extent, that's good. May I request everyone to mute themselves because there's some noise in the background, please? So on your point about the coders, you're absolutely right. I mean, India has such fantastic institutions where what the government and the universities can do is to actually look at, what is the demand globally and in India, and what is the current supply. Make a plan for the next 3 to 5 years, and encourage, many of our really bright students to get into this sphere. It's a broad sphere, but there's great specialization even within the sphere, and I think it's really important to emphasize this. With regards to the issue of infrastructure in rural areas, I mean, I cannot agree more with Gautam. We see this all over the world. It's not just an Indian phenomena, but the silver lining that we found in Africa, where infrastructure is even less, is that mobile money, and I'm not even talking about smart money, just simple mobile phones, have made a huge difference on the payment side and now on the credit side. So in the interim period, they should use what they have, but over time, there is no question they have to increase the infrastructure. The government has to step in to incentivize the private sector to come in. And internet is also a huge big issue. So absolutely. Charan, on the issue of gender and financial inclusion, if I can share, I don't say this around the world, but I am so disappointed, I have to say, when we looked at and compared India. I do find, it's very interesting when you do a survey, and there was a recent survey by the Pew Foundation of people's attitudes towards gender, race, ethnic diversity. I was very, very pleased to see that in India, almost 80%, whoever they interviewed, they were very favorable towards gender equality. And India was one of the top countries, and I was like surprised to see. But on the ground, you're absolutely right. The cultural norms in our country are comparable to some in the Middle East. I think African countries are more advanced. Latin American countries are much more advanced. So, and this is especially true about the rural areas. And everybody, not just the government, NGOs, think tanks, everybody has to work very hard towards making these behavior changes. These are not easy to break, but technology breaks a lot of barriers. And what we found, for example, in the Middle East, where Fintech has narrowed the gap a lot, women are sitting at home and doing it, and it's working there. They don't have to step out of the house. But I couldn't agree more with you. It's an area I would love to work with respect to India.
Ratna,
yeah.
There are so many questions. I do not know how to distribute the time.
Oh,
right?
Okay.
But
yeah.
I have one quick suggestion. I was thinking most of the business correspondents are men. And I was thinking a team, a battalion of business correspondents who are women. And maybe that will help me solve the gender problem. Okay, but let me now make a request to everybody. There are too many questions being asked. I'm only going to choose, and just because of paucity of time, and request all those people whom we are inviting to ask questions personally to be very brief and focused, so that we could have more questions if the time permits. So first of all, I'm going to ask Professor Swami from Hyderabad. Then I'm going to request Mehul Gupta. Then I'm going to request Amrita, she's from Bombay. And then I'm going to request Daria to ask the question. If you're not audible, I have your question. I can ask Dr. Ratna myself, but I thought it would be good that you can ask your question in a pointed way and express yourself. So first, let's go with Professor Swami.
Thank you, Charan sir, for giving me the opportunity. Ma'am, it was a very insightful presentation by you. We are all very much enlightened by your presentation. My questions are, of course, 3 in number, but I will ask only one question, as Charan sir has rightly told me, to maintain the time. You have done an extensive work in the area of financial inclusion. And I just wanted to know, is there any kind of a threshold effect of financial inclusion on inequality aspects? That's one thing. If you wish to take one more question from my side, I have got one more question. That is, with regard to this regulation of the digital finance. Just now, a flashing news is that the Paytm's mobile app has been dropped or removed by the Google. So if Google can now start regulating these digital financial services providers, then what is the role of the central, that is statutory regulator, that is the Reserve Bank of India? So that means we are heading towards multiple regulators on these digital finance providers. So what are your views in this regard? Thank you very much, ma'am. Thank you.
Mehul Gupta, can you ask your question quickly and in a focused way?
Yeah. Thank you, ma'am, for excellent presentation. Quickly, I'll just, my key question is basically.
Mehul Gupta.
Can you hear me?
Yeah, now we can hear you better. Please be brief and quick.
Yeah. So, ma'am, my question is basically, you said the US and China has about 98% share in global fintech credit. So I just wanted to understand what are the key differentiators you see in China and US relative to other geographies where the credit hasn't been that much.
Can we request Amrita to ask her question?
Hello, am I audible?
Yes, you are.
Okay. So actually, doctor had mentioned in her presentation that in Kenya there was reckless lending due to which there has been an increase in defaults. So in India also we observe a lot of fintechs who are backed by VCs who want more growth. So from a policy perspective, how do you ensure the right balance between growth and sound financial principles, especially for lending?
Good. And can we ask Daria in this round? This is the Daria will be the last person. If we have time, I'll come back again. So, Mr. Daria, can you please ask your question quickly?
Good evening, all. My question is, in this pandemic situation where technology and especially fintech is important, should CSR provided to rural India? How can IMF help? What are your views, ma'am?
Thank you. I think we'll go in the next round if time permits. Dr. Ratna, over to you.
Okay. So I'll also try to be brief so more people can ask questions. Dr. Swami, on the threshold question, the honest answer is we did not explore for thresholds because they do differ across countries. But what was very clear is that there was a very positive relationship between financial inclusion, greater financial inclusion, and reducing inequality, which we found in every part of the world, advanced or low income. Another way of answering your question is that you have to keep doing it. It's the results are positive at every level. On the issue of the regulation of digital finance and the Google, this is exactly the concern that I was expressing, where the big techs, are kind of playing too much of a role, where even the governments can get subordinated. So the regulation of the big techs is a big agenda, which actually the IMF is working with the Financial Stability Board, the global one. These are big topics. A lot of work is ongoing right now. Very legitimate concern. On the question, on Mr. Gupta's question on what is facilitating the digital credit, I mean, China, which is the overwhelming majority, has done an incredible job, and which has been facilitated very much by the three big tech companies. The model there is there are three big tech companies. Commercial e-commerce has helped tremendously, and they have made a lot of inroads. So it's a very peculiar model in China, which has facilitated, and also they started early, as I was mentioning to you, after they actually faced the SARS pandemic. In the US, it is growing, but it's not that high. It really isn't. The big banks still dominate. The fintech companies that I met in California just recently, actually, they are struggling themselves to make their presence felt, especially in not in payments as much, but in the other aspects of inclusion. Amrita, on your question on defaults and what can be done, I cannot overemphasize the role of the regulators here. And I have to say, I don't know the latest, but when I met colleagues at the Reserve Bank, I am quite impressed with how much the Reserve Bank is not just on top of the regulations, but also it has been very proactive in promoting competition, with an open platform, So I think the Indians have done reasonably well, but they cannot. They need to remain alert, and especially as you say, in protecting the really poor people and the small firms. So the answer to that is regulation and supervision 3 times over. To be honest, I did not understand Daria's question because. So let me stop there. Charan,
Daria, do you want to ask your question again? I can read it for you. The question basically is, should CSR provided to rural India become important? And can IMF help us in ensuring that the flow of resources into CSR and into digital or fintech companies in the rural areas? That was his question in a sense.
so Charan, I have to say that I don't know about the Indian situation, so I don't want to answer a question.
So there are a few more questions if I can ask, and we have a few more minutes. The question is, and this is a very genuine question, this is an unexplored area of financial inclusion and fintech companies. Would it not lead to added risk into the system of finances? And because we are dealing with very poor people, downtrodden people, once their trust is lost, it can become really devastating for the financial system. That's one question, your views. The second question is that you yourself stressed upon technology as well as fintech companies and the regulator. Now, the question that has been posed is, should we have numerous fintech companies or few so they can be regulated effectively? The third question is, in a diverse country like India, and this is unique to India, drawing upon your experience from the international world, in a diverse country like India, financial literacy is a challenge, especially because financial inclusion pertains to a very wide spectrum of things. On one hand, small businesses, and on the other hand, individuals. So having a common model for everybody may not be the safe. And how do you really go about financial literacy for each segment? These are the three questions we can take now. And there are more questions coming. If we have time, we'll go to the next round.
Thank you, Charan. Let me quickly answer. Yes, absolutely, there are risks to fintech, and some of them I already emphasized. What we need is some understanding at the global level, which can be adopted because it cuts across borders, like cybersecurity cuts across borders. The big techs cut across borders. So I think there is still a gap, and as I said, work is ongoing, but that it's needed to address the risks, and it should be done. Then on the second question on the what is the right model, numerous fintech companies, few regulated ones. I think, to be honest, it's an excellent question. It's an open question. I think both models could work, but if you were able to actually regulate effectively the big companies, there are advantages. My one concern is, how do you regulate the global guys? How can, for India regulate Google, for example? So that issue needs to be addressed if you want to have big players. The issue on financial literacy being a challenge and a common model may not work. Now, very interesting, in India, when I traveled, I was so impressed with the small fintech companies in South India, North India, etc. They were working very hard to tailor their services to the culture also, not just the needs. And I think that model is pretty good. So from that perspective, you don't need a common model. But I do strongly believe, that there is some basic literacy in both the financial area and in the digital area, which should not matter which part of India you come from. Everybody should have that basic education. Charan, we have 5 more minutes, I think.
More questions which have just come up. Can I ask the speakers to please articulate your questions yourself? Can I request Raghav Kotak to start? Please be brief. And if he is able to tackle time, then we have still more questions coming in. Then I would like to I would request Kamal Kishore Jani to be the second one to ask, and then Chetan Sharma to be the third one to ask. Can I request Raghav Kotak, please?
Thank you, sir, for this opportunity, and I am very grateful for the presentation and the amount of research you put in and the scrutinization that showed in your research. Ma'am, my question to you is this: that as per the current scenario, fintech is relatively new to an impressive majority of the youth, and the youth hasn't yet evolved to financial digitization. So how do you suggest we bridge the gap, ma'am? Because there are still, a lot of people, a lot of young generation guys who still don't get the concept of how do you suggest we bridge the gap, ma'am?
Raghav, it's a very good question. But even though you say that they don't get it, I mean, I think the youth in India, the very fact that they are so much on the internet, they use their mobile phones to make purchases, to do transactions. A lot of them are just learning by doing. And I think of course, it's not in a systematic way. So that is why I'm suggesting that there be some courses, simple courses. By the way, countries like Malaysia and Indonesia are just offering 2-month courses, 1-month courses. I mean, the young kids pick up very fast. They're already experienced with something. I think having a structured course which combines the two, finance and digital literacy, would be extremely helpful to these guys. And this course should also talk about the risks, right? What you should watch out for, so that people don't get cheated. Financial integrity is also really important. The country that has done phenomenally well on that I know of in educating its population is Singapore. Of course, it's a small country, but there's something to be learned from there.
Thank you so much.
Kamal Kishore Jani to ask his question.
Yes, madam, I am an ex-banker, and I have already headed the finance and inclusion department with almost 2,000 branches all over the country. The major point is how to reach the last mile person in all villages, district, talukas, and all that. My suggestion is that we have very robust Panchayati Raj model in India, and the Panchayat chief, he takes care about so many issues on behalf of the government of India or state government or district level and all that. India should prepare a model with the help of this Panchayati Raj model, that how to reach to the every person in the village or the taluka level to develop this fintech and the inclusion. That is one thing. Second thing, if we are going through the Panchayati Raj and the head of the Panchayat, the default will be very, very minimum, because people in the village have to show their face to each other. So I feel that, like in Amul, Dr. Kurian had a very larger views to involve all the ladies from the villages. Country like India, we have very robust model of the Panchayati Raj. We have almost Panchayati Raj ministry in the central government of India. I think we have to take the help of this Panchayati Raj model and then try to find out how we can increase our financial inclusion through fintech.
Mr. Chetan Sharma's question, I'll just tell. His question is basically, I think, a beautiful question. He's asking that the geo in our country has revolutionized digital world in the last 3 years. Will it lead to monopoly of data and information, and is it of any risk?
So let me take the two questions. Mr. Kamal Kishore's point is absolutely is really a very good point, and congratulations on the work you've done, Mr. Kamal Kishore. I totally agree that if you want to reach the last mile, you have to build ownership by the most influential people, whether they be panchayats or village leaders in Africa. They have to come on board. And I totally agree that we need to be working with different kinds of stakeholders in order to maximize the speed and the effectiveness of financial inclusion. I don't have an answer how to. I don't know enough, but your focus is the right one. On the question on monopoly of data, absolutely. I mean, there is a concern. There is a huge concern. I mean, look, I traveled to, just to give you an example, I worked on China for 2 years, traveled there for many times, led a country team of people to work on the financial sector. I have no doubt they have everything on me. I have no doubts, because I could see in my own on my computer, on my iPhone, I used to get lots of Chinese messages, click points. So I think many countries have a lot of information on a lot of people. It's already happening. And that's the flip side of technology and these advancements. So that is another area. And there is a big global initiative on data protection that is also in train. I think it's absolutely needed.
Thank you. Go back to the chairman of the session, Dr. Birmani.
Thank you. I think we've had a very good discussion. Ratna, I hope you enjoyed it as much as we all did. And you can see there was a lot of interest from the number of questions, etc. So thank you very much. Well, I think we had a pretty long one. I can't say that we should have it even longer, because I think 2 hours is kind of already the limit. But thank you to all the participants and people who came on the web chat. I think, Charan, you want to tell them about the next
Yes,
webinar we are going to have?
I would like to mention.
Let me just say that I thoroughly enjoyed it. I think the questions were fabulous. I am so happy to see so much interest in this topic. And there are a lot of insightful things. I've been reading the chat that people have mentioned that we couldn't address. So thank you very much for having me, and especially to Charan.
Thank you. I want to thank each one of you. This was in association with the ASSOCHAM. We are going to come out with more ASSOCHAM EGROW Foundation collaborative webinar series. The next series, in this series of the webinar, the next one is on banking in India. It's a panel discussion of 3 fabulous bankers, very experienced and just retired. Then they're going to look at different aspects of banking in the country. They are going to look at restructuring. They're looking at the NPAs and the stress levels. This is on September 21, 5:30 to 6:30 in the evening. And please tune in to EGROW Foundation, and you will find all the links for the next webinar, September 21, Monday, 5:30 to 6:30. With this, back to the chairman of the session.
Well, thank you. I think I've already thanked my audience. So, good evening. And I think that's one of the funs of this silver lining, I shouldn't say fun, of the COVID restrictions, is that people are beginning to enjoy these webinars. Thank you, everyone.